All right.
I wanted to hear more stories about our Co-100.
I really could have gone on for an hour. I met some amazing people.
Incredible people.
Yeah.
Congratulations to
Yes.
all of you.
Thank you. All right. So Neil, this is kind of our thing, right?
It
We
is.
do this maybe 4 times a year.
Yeah.
Why don't you start out by, if you don't mind, talking about the economy, just the general state of the economy and how it's impacting small business.
Yeah, I mean, the fundamentals of the economy are actually remarkably strong. Obviously, we've had a big problem with inflation, and it's kind of unprecedented for most of us in our adult and professional lives, and certainly for new small business entrants. You got to go back almost 30, 40 years before we had the types of inflation that we've experienced the last several years, and so that's been a huge headwind. But the American economy has been incredibly resilient even in the face of those headwinds. In our own small business surveys, we have about 70% of small business owners who expect revenue growth over the next year, 44% who say that they intend to increase headcount over the next year, and that's consistent with what you see in the overall trends. Now, here's the good news about inflation. The most recent headline number was 2.5% year over year. It's not where we want to be, but we're trending down. And even more importantly is that we're continuing to sustain wage growth outpacing inflation. You know, if you go from March of 2021 to May of 2023, every single one of those months, inflation was growing faster than people's income. And we survived those months because people were spending down their savings. Now, there's only so much you can do when you're spending down your savings. Since May of 23, for every single month, wages have outpaced inflation. And what that means is that the American consumer is becoming more resilient. It's going to take a little while. We're still not out of the woods yet, but we're on the right trajectory.
I forgot to say that Neil will be taking questions. So as he's talking, if you have questions that relate to what he's saying, we'll come to them a little later. One of the things that you and I have talked about, actually, I'm sorry. Let's talk, there's a couple big deadlines looming this year. Let's start with that. What are these deadlines that small businesses need to know about that are coming soon?
Yeah, perhaps the biggest one is December 31st of next year. And that is when most all of the tax changes and all of the tax changes that impact small businesses that were enacted in 2017 expire. So stroke of midnight, December 31st, 2025, unless Congress and the administration come to an agreement, we reset back to the tax code that we had prior to 2017. What does that mean if you're an S Corp or an LLC or a sole proprietorship? What that means is that your top marginal federal tax rate will go from 29.6% to 39%. So we're increasing it by more than a third overnight. That's obviously not sustainable, and it's something that Congress is going to have to address. There's a bevy of other tax provisions, if your business does R&D, for example, that have already expired, that will continue to get worse. If you're making capital investments in your business, some of those provisions continue to phase out. So in total, we have about a $4.5 trillion tax cliff that's going to hit. And this is going to be the top priority, certainly for the U.S. Chamber, but also for the folks that we elect in November come 2025.
Another deadline that's coming is the deadline to file your beneficiary ownership information report.
Beneficial ownership report.
Beneficial ownership.
How many of you all have heard about this? Okay, that's good. That's a good start. We're going to have to do more. So this is a law that was passed by Congress in 2021. And essentially what it says is, if you are the owner of a business, and a business is essentially defined as an entity that you had to register with the state. So those of you who are LLCs or S corporations, you'll remember when you started your business, you filed paperwork with the state that you reside in to open your business. And what the law says is that by January 1st of this upcoming year, so the end of this calendar year, the owners of that business have to file a report with the federal government about who the beneficial owners are, meaning who has the right to proceeds from this. In short, what it basically means is that if you have equity in the business of 25% or more, or you're the CEO or you have direct authority over the business, you have to register with the federal government. Now, the stuff that you have to register is not terribly complicated. It's the name, your address, who else is a beneficial owner, but you do have to include things like a photocopy of your driver's license and your passport. And here's the deal. If you miss the deadline, there are penalties. And the most stringent penalties are if you are found to have willfully missed the deadline, it's something like $590 per day that you're late on filing. So you do not want to be late on filing this. If you've gotten this paperwork, make sure you go do it. If you don't know what I'm talking about, go to CO. CO has some great resources that walk you through, do I have to file? What do I need to file? Where do I go to file? You have to fill out a special form online, and they can help you through all of that. But don't miss it.
Yeah, and we're going to be sending those articles out in a post-event email. I've found that accountants last year were not really talking about it. This year I've talked to 2 accountants who said, oh yeah, I'm filing those for my clients. So your accountant probably will do it for you if you need them to.
There was a lot of hope that this would go away, and there was one court decision that made it go away for named plaintiffs in that court decision. But unless you're part of that group, it doesn't apply to you. And so you want to be rather safe than sorry. File the paperwork, be done with it, and that way you don't have to worry about it.
It's just a one-time thing, right?
Yes.
Okay.
And if you start a new business, you'll have to do it again, but yes,
Right.
in general.
Small business lending, we're talking where interest rates have come down a little bit. Where are things with interest rates, and how is that impacting the ability to borrow money by small businesses?
Yeah, so a lot of interest rates paid by business loans is really tied to the federal funds rate. And so this is the interest rate that the Federal Reserve controls. As you know, to beat inflation, they were ramping up pretty considerably and pretty quickly the federal funds rate. We just had our first cut of the loosening cycle. So it surprised some people. We had a 0.5 point cut in the interest rate. We do have 2 additional meetings. We expect 1/4 point cuts at a minimum kind of going forward, and we'll have some more cuts into next year. What importantly this means is that we're on the direction of travel of interest rates coming down. And so that will begin to loosen up lending at financial institutions and banks. You'll begin to see kind of lower interest rates. It does not happen overnight. There are lags in these things, and there are other factors impacting bank lending, including some of their requirements to hold cash and liquidity. Some of those they're contemplating changes in that at the Federal Reserve. And so the good news is that it should become easier for small businesses to get loans, but it's not going to happen the next day after the Federal Reserve makes an interest rate change.
Great. What about, so we do this quarterly survey, this MetLife Small Business Index that we do here at the Chamber, and a big number, 44% of small businesses anticipate hiring in the next year, and that part's not so surprising. What's surprising is that it's been difficult to hire. The labor market is tight. So do you see the workforce, do you see changes in the workforce, or that loosening up a little bit?
Well, it's gotten easier, it's gotten a little looser, but only by comparison to how tight it exceptionally it was and how hard it was for people to hire. And so I get frustrated sometimes when I watch the news or I read the newspaper, and you have these people talking about how there's so much laxness in the labor market and it's softened so much. And I said, it's only by comparison to what was a really difficult moment for businesses to hire. One way I like to think of it is, what's the matchup between the number of jobs that businesses are advertising that they're trying to fill and the number of people looking for work? And if you go back to basically the 20 years before 2019, the normal state of affairs was that in any given month, there were more people looking for work than there were open jobs. Now, that didn't mean that the people had the right skills or that they were in the right location, but as a general matter, it was easier to go out and find people to fill jobs. For demographic reasons and economic reasons, even before the pandemic, that began to shift. And we started seeing about the first 9 months before the onset of the pandemic that we had more open jobs than we had people looking for work. And that's when we really started hearing about the tightness of the labor market. We then kind of forgot about that during the onset of the pandemic. And then when everyone came back and reopened, and many of you started your businesses, it came with a force. Well, today, we still have more open jobs than we have people looking for work. And because of the demographics of the retirement of the baby boomers, that's likely to continue. And so while the labor market is easing, and it may be a little bit easier to hire than it was a year or 2 years ago, I'm afraid this is probably a little bit of the new normal, and it's going to be with us for a while. As long as we have a good and strong economy, we're going to have a really tight labor market.
A tight labor market often means that businesses are looking for creative solutions on how to staff. And what I call 1099, but contract employees that are not full-time, but are issued a 1099 at the end of the year, is a solution for a lot of business models.
Completely.
There are some regulations around 1099 employees that are changing, and I find it very confusing because they're different. The regulations versus the tax laws are different. Can you just give us a summary of the 1099 situation?
Yeah, and it is complicated, and it varies from state to state because in some instances states have adopted. But in general, there's a big debate going on about whether or not it should be harder to classify someone as a 1099 contract employee, and if instead employers should be forced to recognize them as a W-2 employee of your firm. And we had a set of regulations on the books that basically were fairly easy to follow. And what they said was, if the individual has some control over when they work or when they don't work, and whether they work at all, and if they have the opportunity to have upside gain or the potential for losses, particularly losses like that there's work not coming in, then you could fairly characterize them from the federal point of view as an independent contractor. In January, the Department of Labor issued new rules that replaced that kind of two-part test with this six-part totality of factors test that includes whether or not there's a reasonableness standard and whether or not the employer exerts any control. Control, by the way, can be defined as you just require the people who come into your business to abide by your safety guidelines or your guidelines that you have that go above and beyond whatever is required by government. That created a lot of confusion because it became really hard to know if you're appropriately treating someone as an independent contractor. And there are pretty significant penalties if the government comes in and says, you got this wrong, that you have to go back and you have to back compensate them as if they were an employee, and there can be fines in that. Now, because this was such a dramatic change, there's been lawsuits filed. We're part of litigation at the US Chamber, and this is working its way through the courts, and largely is on hold until we figure out what the courts are ultimately going to say on this. But it's a big issue, and it's one that, depending on where the election and what whoever's next in the White House wants to do, and depending on what the courts say, it could be a major change for those businesses who want to rely on independent contractors.
Yeah, so it's just something to be aware of
Yes.
as you're building your business.
Yeah.
We have talked a lot about AI in the context of hiring and of needing of a worker shortage and using AI to do jobs and free up human employees to do more complicated things. But you and I haven't really talked a lot about legislation around the use of AI. what are we seeing there? It feels a little bit still like the Wild West.
Well, at the federal level, we have a lot of talk, but no real action in terms of implementation of new laws or regulation. That may change as we get into the next Congress. I do think that this is an issue that the next Congress and the administration will want to tackle. To date, a lot of the activity has been at the local level, at the state level. We have Colorado, where the governor just signed some legislation. It's really more applicable to the folks who are designing AI, but it would limit some of your ability to use it. The governor in California just vetoed legislation. We expect a lot of legislation in both red and blue states when legislative sessions kick up in January. We're especially concerned that some of the proposals sound really nice, I guess, if you're on the campaign trail, but practically are just impossible. We've been fighting back, for example, on some of these ideas that consumers ought to be able to opt out of AI, so that if you're managing your consumer contacts or your customer databases, or let's say you're offering quotes for services to folks and you're using AI as part of the background to determine that your customer ought to be able to raise their hand and say, no, I want you to do it in a way that doesn't use AI, as if you're operating 2 marketing systems, 2 customer contact management systems, 2 sales service pricing systems. And we just know that's practically not true, but you can imagine how that resonates on the campaign trail when people say, I just want to opt out, freedom. And it turns out that the freedom that they're promising means the government directly telling you how you operate your business.
So speaking of the campaign trail.
There's an election?
Yeah.
No, I'm pretty sure no. I thought we were skipping that this year.
Sadly, no. Tell us, just what are we looking, what are we just hoping for? Not who do we hope will win, but what are we looking for in terms of just what we think will make for a good outcome generally for business?
Well, yeah, listen, I'll leave it to each of you as individuals and business leaders what you think the kind of the best outcome in terms of candidates are. That's not for us to opine on. But what I will say is, and this is what we're really focused on at the U.S. Chamber, is no matter who wins, it's going to be an election that is reflective of the fact that as a nation, we're pretty closely divided politically. It doesn't necessarily feel that way often in our hometowns or in our states. We've kind of sorted ourselves out. But nationally, we're pretty evenly divided. And so no one's going to win in a landslide at the presidential level. Whichever party controls the House and the Senate, I bet I can count the size of their majority. If not on one hand, I guarantee you it'll only take me 2 hands. And in that type of divided moment, what we really need is Republicans and Democrats figuring out where they can come together and solve some of these problems. They got to solve that tax cliff that they talked about. They got to figure out how to get AI regulation right. We got to do something on legal immigration and workforce issues. And those things are only going to be done on a bipartisan basis. Interestingly, when we surveyed small business owners in the last quarter, 3 and 4, so 75%, said it was more important for whomever gets elected to focus on finding common ground so that we can start getting stuff done in government again than fighting based on whatever principle they brought to the table. I think we're kind of done with the, let's go to the ramparts and all fight each other. Let's get to the point where we can find some ways to find some common ground and start to solve some of these problems.
You really saved me from, I really didn't ask that question well, so thank you for saving me and answering it well. I would like to give you guys a chance to ask Neil some questions. If anyone has any questions, you can raise your hand, and we have, I think, mic runners on both sides. Does anyone have any questions for Neil? No?
They figured out I wasn't going to say who was going to win the election,
yeah.
so then it stopped being
I see
fun.
someone way in the back there.
I caught parts of that, but hold on one second. Yeah.
Sierra's coming with the microphone.
Hello.
Hi.
Better, yeah.
Lisa Canning from Lisa's Clarinet Shop. We were talking around the table about EIDL loans and how about 20% of them have been written off and how difficult it has been for small businesses to recover from them. And just wondered what commentary or if you knew anything was in the works to do anything more. Maybe not, but just wondered.
Are you talking about the EIDL loans coming out of the pandemic or some of the new ones
coming
with
out of the
respect to the
pandemic.
disaster? By the way, I mean, it is going to be an important tool, but probably will not be sufficient for those impacted by Helene, and we'll see what happens with this current hurricane, but obviously very, very disturbing there. I don't expect a lot of changes on kind of further loan forgiveness from there. There's a bit of a growing skepticism on the part of policymakers to kind of revisit the terms of some of these loans, so I don't expect a lot of changes there.
Hi, Kelvin Green. So first, thank you for your presentation. And when you talked about, the job market where there's more jobs than there's people, right? And we do know that AI is coming and it's going to take over more of those roles, right? Okay, that's going to reduce the need for more people in the workforce. Now, you mentioned guardrails. What is your thoughts on the impact to the economy when you put those guardrails on AI and you stunt our capabilities and our abilities to automate those roles so that we can take those places and the impact it would have in terms of global markets where they're not doing those same things?
Yeah, no question AI is going to lead to dislocation. The things that people do today as their job will be different than the things that they will do in 5 years or 10 years. And that's just been true of all kinds of technological disruptions, right? And so, the advent of the ATM machine, I don't know when the last time I walked into a bank and spoke to a teller was, right? And I don't even go to ATMs anymore. Now I just do it all on my phone. And so, but all of those technological advances, when we can easily identify who's being disrupted, what we don't often see is all the things that are created in other places on the backside that are new opportunities. And so from a public policy standpoint, what I hope we're focused on is people whose jobs are disrupted have an opportunity to get skills and opportunities in the new jobs that are being created. My biggest fear is if public policymakers, if our elected officials come in and say, no, 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 we just want to keep the jobs that people have now and that they know, and that we will prevent kind of this automation or AI from displacing people. Because all that means is that we're just going to become really, really inefficient, and that our economy's not going to grow, you're not going to have opportunities to improve the operations of your business. I want to say that is almost an exaggerated fear, but listen, if you were following what was just going on the East and Gulf Coast port strike, this is a fight over whether or not, they say automation in ports, and you're like, well, what's that? And I actually didn't know, so I went and started looking at it. How many of you when we parked in a parking garage, have done the automatic thing when you exit? Everyone? When was the last time you actually went to a parking garage and there was a ticket taker? That's automation at the ports, and that's what they're saying that they want to block because they want someone there processing the ticket. All that does is make those ports really inefficient and actually raises the prices for everyone who's trying to get stuff in or get stuff out of those ports. And so I'd like to say policymakers won't do that, but man, if this debate over the last couple of weeks should be a stark warning to all of us.
One more. Yeah, we have time for one more. Go ahead.
I'll speak really loudly. With that same question in mind, if you were talking to an 18-year-old, a 22-year-old, a 25-year-old, what industries would you tell them to move towards? I'm thinking of the graduate in plastics.
Yes.
What is your
I have a word for you, plastics. Yeah, you hear commentators saying that this disruption is really going to be towards the knowledge economy, and so to the extent that you are creative or you're a writer, that there's going to be displacement there. Or we told everyone for the last 20 years you got to go become a computer programmer, and then it turns out that AI is a pretty good computer programmer. all of which makes me a little bit reluctant to say plastics or go into the hard skills. Listen, I think what my advice to an 18 or 19-year-old is worry more about going to a place where you have some passion and where you're going to want to continue to learn, because the truth is whatever it is, the job that you're doing, it's going to be affected by these changes in technology. And if you have zero passion for learning how to adapt and learning how to improve in that, you're going to be pretty miserable, not to mention miserable because you have no passion for your work. But whatever it is, if you have passion for it and a willingness to learn, you'll end up okay. That's the great thing about this stuff. We don't know how it's going to turn out. The only thing we can say with certainty is that if we said anything with certainty, it would be wrong.
I think that's all we have time for, but I never imagined that you would be saying, follow your passion. So thank you for
believe that.
That's what all these people did.
I know.
So thank you.
Thank you.